Hello, in today's video, we're going to be talking about how it is here. This is the CPI print everyone has been waiting for, and the chart is at a critical level here. We can note that we are right on the green line, which is going to be our strong support found back at 380.54. This is going to be our May 20th low. And we can also note that we open right at the pivot. So this is going to be very, very, very important just because we open on the pivot, push down to support, and we closed just above 380.54. This is important because today's daily candle has roughly the same range on the top as we do on the bottom. So what this means is that we have a spinning top that opened up roughly flat, pushed up, sold off, and printed a lower low. So if we're going to fail, meaning the bears are going to flex from here, we're going to reject and not get back above 381. It's that simple. If the bulls are going to take charge, we're going to be back above 384 before Friday. And that's going to be very important because the data that we have coming out is going to support or contradict what we have here. But also note that we have very low volume. So ever since we've been going higher since last week, the volume has been really dropping off because I think a lot of people are already positioned. And it's the summer. We normally see lower volume during the summer. So I cannot emphasize just how important tomorrow is. It is going to be pivotal to the chart. It's going to be pivotal to sentiment. And we're going to find out where we're going to go. So just to step back here, we note that we got we have the CPI print coming out pre-market tomorrow. What does that mean? It means that right now there's two numbers we're going to be looking at. We're going to be looking at year over year, and we're also going to be looking at month over month. For me personally, I'm going to be focusing more on the month over month. And the reason for that is because we all know that compared to last year, inflation is a lot higher. If we're going to be getting a peak in inflation, what we're going to notice that the month over month is going to start coming back down. So everybody has an opinion on where inflation is going to go tomorrow. I don't really want to tell you what I think. I think I've already done that. Instead, what I want to do is prepare you for the what if we go up, what if we go down, regardless of what the number is, because we could have a negative print where bad news is good news. We could have good news being bad news. Honestly, I just don't know how the data is going to be interpreted by Mr. Market. After that, we got the BOC rate decision coming in at 11. And that is going to either have an impact on the dollar or an impact on sentiment. And then Thursday's a banger day. We got PPI, earnings, China, Q2 GDP, and then retail sales and monthly OPEX on Friday. So I think the chart cannot be more obvious to me in terms of what we need to do. Open on the pivot, push down to the support, close above support, but unsure where we want to go from here. And apparently there was the CPI data print that was leaked. I don't really care whether it was leaked or not. What I'm looking at is the tape. So what I want to look at next is going to be the options chain, just because I think this is important for us to understand what the motivation is. Yep, bears flex today. We also have to note that they got open interest. Again, volume starting here at 385, going all the way down heavy to 380. And we have continuation all the way down to 375 and lower. Big OI is found at 378. And ironically, that 380 put actually, this is for Wednesday, my apologies. So that's what we would expect. People are positioning mostly bearish here. In terms of calls, we have to make it back above 384 for them to get anything. 384 to 386 are in focus. The more important chain for me is going to be the one for tomorrow, not for tomorrow, for Friday, where we're going to have monthly OPEX, which is going to be July 15th. We're looking at July 15th. We're looking at the 16s. And here again, what do we have? Oh, God, right? We got 380 and we got 380. So the bulls want it above 380. The bears want it below. It's that simple. So in terms of where we're going to go, I don't know. I think we're going to get a big fat move though. And yesterday we were talking about a straddle being built for August. And I saw a continuation on that today. So what does that tell me? Everyone's kind of looking at the exact same thing that I am. Everyone's looking at this is the critical data point. We're either going to get a massive pump or a massive dump. I don't think we're going to have very much in the middle. So the reason I say that is because this 380 is the only strike that has more than 10,000. And if you're not already positioned in terms of options going into tomorrow, it's kind of too late. So this straddle here has about $13 in premium on the call side. We're looking at this number right here, 13 bucks. And then we got about $11.50, call it 12 on the put side. So this is roughly $15. The exact same areas we were looking at yesterday. So we go 380 plus 25. Is it 25? Yeah, it's 25. So if they're going to make anything on this straddle, we have to be above 485 or we have to be below 355. Are both of those numbers important? Yes, they are really, really, really important areas. So again, one more time, 355 or 405. If we look at the chart here now, let's go to the bear side first, just because it seems like there's a little bit more motivation there. That is basically our 200 weekly moving average. So if we're going to get a bear move, again, as a reminder, we have a weekly chart here. And I don't know if I really want to, I'll delete all the charts and come back here. So I'll delete the drawings and come back. So again, one more time, low, higher, low, higher, low, higher, low, higher, low. So 5 candles with higher lows. Then we got higher high, higher high, higher high, lower high. So what is this forming? Well, for the last 3 bars, we're forming a triangle or a pennant or consolidation. So what this really tells me is that whichever way we're going to break last week's range is going to have a fat move. If we go down, we're probably going to take out the yearly low. Right now, that's going to be here at about 362. And all we have to do is lose last week's low at 372.9 for me to get my confirmation that we consolidated for 3 weeks in a row. And now we're resetting to go back down. And on the opposite side, if we're able to take out the high at roughly 390.64, so call it 391, I believe we're going to have a massive, massive, massive move higher. I personally believe that if we're going to get a move, meaning if we get a bullish reaction to the number tomorrow, I think we're going to pump way more than if we get a bearish reaction. Why? Everyone's on one side of the trade. So if everyone's on one side of the trade looking for the same thing, what can happen? Well, people can be caught offside. And that's what I think has happened right now. I think some people are caught offside and they're unwilling or unable to switch. So in terms of 405, what that would mean is that we're first of all going to fill this gap. That would be filled. We would be above our 50-day moving average, also bullish. And then we basically get here to 405, which is going to be our May low. So that's going to be a monthly level. If we now look back to here, trying to understand what's happening. There we go, right? So we get 410 after we make it above 405. And it's not really all that complicated. So the May low that we just looked at is going to be a weekly low. Our low for May is 380.54, that key area we're on right now. So a couple more things I want to point out here is just that what else we even want to look at here? So we looked at the options chain. We looked at SPY. Let's have a look at our indicators here. So, still inverted. 2s, 10s are still inverted. VIX is up to 27, still below 30. Dollar is starting to throttle. And noticing that crypto is taking another leg down. But everything is really going down here. Oil got a massive stomp. Oil is down 8%. That's a big, big move. Every $1 trillion company other than Apple and Meta are lower. And then in terms of ETFs, all we got is ARK. So honestly, the picture is really, really mixed. What I want to do now is actually have a look at QQQ to know whether or not we are seeing anything different here on the daily chart than we are on SPY. So, actually didn't even note that we got the 50 DMA test here. I've not been really looking at QQQ as much. So this is kind of what I was personally looking for on SPY. Let's go back to SPY for a minute. I think we're going to hit the 50, back off, advance, back test the 50, and go higher. So what's really interesting is that QQQ is already doing that. And if QQQ is leading still, what would we expect to see? I would expect to see a test of the 50, a backing off, and then advancing higher. And visually, I see a level that is critical here. Super fast. I see it without even thinking too hard. Right there. Boom. 384.94. So, 384.94. Roughly 385. What's our low of the day? 384.61. So this, for me, is potentially an inverse head and shoulders. From here, if this is bullish, we should reclaim that 50 with no resistance. It should blast over. We should fill the upper gap here, and we should not look back. And it's really that simple for me. So QQQ, now that I'm actually looking at it, I probably was missing part of the picture because I actually was not looking at this. 385, nice round number, also aligns with a bullish pattern here. So again, I think that for me personally, what I'll finish off with is just talking about this. So the last time that I thought we were getting a massive trend change was when we were roughly at 460 to 480. And it was damn near impossible to get anyone to agree with me that we were going to be going downtown, meaning going down. And what I've been noticing is that A lot of people are commenting and saying that, oh, well, there's no way we can go up. That's exactly when we can go higher, when no one expects us to. Why? No one's positioned for it. Shorts have to unwind their positions, and that means we have to go up. So the recency bias is something that's really strong in retail investors. So what that means is that you look at what's happened most recently, and with the worst start to the year in 50 years, yeah, it's very easy to say that we're going to keep going lower. That's definitely the trend. It's definitely what we're noticing. It's also what your brain's been trained to look for. So all I'm going to say is that for me personally, the recipe that I love to use, and the reason why we do those polls on the weekend in terms of up, down, or flat for the market is that I like betting against retail. And right now, the picture could not be more obvious for me. If, again, keyword there being if, we're going to get a bullish reaction regardless of what the CPI print is tomorrow, a lot of people won't believe it. A lot of people are not positioned. And that is how we can birth a new bull market where we can go dramatically higher. If you want to know more about my thoughts in terms of why this is bullish, I encourage you to watch the video that'll come up here in a moment. Otherwise, thank you for tuning in every day, and I really appreciate your support. Good luck tomorrow. Thank you.